Good evening. I'm Ross from Lifetime Property Accountings, and we're just going to go through two really basic tips for financial statements, or it's also two commonly seen mistakes. These are mistakes that we see all the time, and they're just real basic ones. In the next few days, I'm also going to do a video just going through some tips and tricks, reviewing through financial statements. I'll go through a full set of financial statements and some tips and tricks today, just these two basic sort of things. So I'm just sharing my screen and sharing the basic information. So this is just our rental example. I'm not giving away someone's financial statements information. It's just our lifetime rental property example. It's made up data. So the first big problem that we see, or the first essential thing, is lots of financial statements just have all the rentals lumped in together. This is two rentals. How well are the rentals doing? Does one have high repairs, one not? Is one making a profit? Is one making a loss? We have got no idea from this. It doesn't give enough information because they've been lumped in together. So your first essential thing when you're looking at your financial statements is make sure they're done per property. You want to see the profit and loss for each property. You want to see, in this case, what Long Road is making, what its profit is, and you also want to see what Cool Street is making, what their profit or loss is. So that is the first most important tip if you're getting financial statements done, your tax returns reviewing your financial statements, is you need a profit and loss for each rental so that you can see how well they're doing. Tip number two, we need double-sided accounting. So sometimes you'll have just a tax return done, and there's a summary, so much rent, so much expenses, what the profit is. Or you might see that's a simple Excel summary of what the rent is, what the expenses is. To me, that's not good enough. What you need is full double-sided accounting. So double-sided, you would find that there's also a balance sheet in there. So as you pay for something, you pay for your rates. That is going to be a debit to your rates, your expenses, they're going to go up, and your bank account is going to go down. That is double-sided. And the reason that's so important is it helps to make sure all the information is there. Everything that goes through the bank account is then in your account somewhere. It could be coded wrong, but at least it's in there somewhere. Yeah, things like fixed assets don't get missed, and that's something that we see quite often. Is that they're actually not being put to an expense because they're an asset, but they haven't been put to assets either. So double-sided accounting helps with that. It's got to be coded to somewhere. It's in there somewhere. It's making sure everything there. You can see what the loan balances are. Then helps to make sure is everything making sense. So really important, the two things, make sure you're reporting property by property for your rentals and make sure there's full double-sided accountant. Make sure there's a balance sheet so you can see what the assets and liabilities are. Everything like the liabilities and that are then linking in with your financial statements, and that's really key. So that's my basic things. Like I said before, keep an eye out the next couple of days. I'm going to go through that full set of accounts, what things I would review, what's the important things to look at. So, just some great things for you to look through and understand. Thanks a lot for your time. Bye.